And look, just to recap, the last 18 months has been pretty extraordinary for everyone. And at a high level throughout, Amcor's remained really resilient. We've displayed that consistent performance. We haven't seen the kind of extreme swings up or down experienced by many companies, including others in the packaging sector. And that's testament to our scale, our breadth of presence globally, portfolio depth, and the focus on consumer staples. So all of that really means at a group level for Amcor, we've not really experienced any overall negative or positive impact relating to COVID. We'll briefly recap on some of the bigger picture stuff on Amcor, what makes us unique, and then give a brief update on the FY21 results. This just is a recap as to why we're unlike our peers. We're the global leader in consumer packaging. We have real, global scale, being in 40 countries, over 225 operating plants. About 55% of the shares trade here in Australia on the ASX and the balance on the NYC. And we've got a combined $20 billion market cap, $13 billion of sales in the recent year, and $2 billion of EBITDA. The first pie chart there just shows the well-balanced geographical spread of that business. Good presence in North America and Western Europe, and importantly, 30% or nearly $3 billion worth of sales in attractive and over the longer term, faster growing emerging markets. The second pie chart just emphasizes that 95% of the sales are coming from those growing consumer end markets, serving customers we're all familiar with, big multinational players and local players. Just focus on the two reporting segments we have to recap what we make and where we do it. Slide 4 just gives a snapshot of our rigid packaging business, which is just under $3 billion of our sales, about 25% of Amcor, and that business is solely in the Americas, about 3/4 of that in North America. And there's some pictures there of the types of products that we make. So from beverage bottles, containers for food products, shower gels, laundry detergents, as well as the closures or lids for those products, and also containers for healthcare products like eye drops or contact lens solution, or containers for medicines or supplements. So it's a diverse range, but all products that we're familiar with on a daily basis. Slide 5 just gives an overview of the flexibles footprint, $10 billion of sales, truly global and well balanced across developed markets and emerging markets. That's it. Just a real interest in our business. Again, a very broad spectrum, but all things that we're familiar with that we use every day. So wide range of food, pet food, home and personal care, medical and pharmaceutical packaging. Slide 7. As I mentioned, that flexibles business is global, and we're the clear leader in every region, as you can see by the bar charts on that graph. And you can also see the significant size of the markets in which we operate. So the markets and the businesses in every single region are fragmented, and we've got ample opportunity to grow the business organically and through acquisitions. So those slides, the aim of those is just to kind of remind you, what Amcor is doing and where we do it, but also convey the huge growth opportunities we have in those markets that we serve. Just captures however many years we've been successful in pursuing those growth opportunities, and it's you can see it here visually through the continued margin expansion. I shared this slide last time we spoke. It's been updated for FY21, and you can see we drove a further 60 basis points of margin expansion in the most recent year. So the markets we're exposed to, our footprint and our scale, are all contributing to that ability to grow. Touches on another area that we spoke about last time, which is the multiple drivers we have to delivering that organic growth. Here, this slide is just focusing on investments we're making in these growth levers, which benefit us now and will continue to benefit us in the future. So an increasing percentage of our sales are coming from more attractive, higher growth, higher value segments. And we have the opportunity to differentiate in those areas. So healthcare, protein packaging, hot fill products in the rigid packaging segment. So, as an example, in healthcare, we're investing in capacity and capability with projects underway in Malaysia and Ireland. In the hot fill rigid packaging segment, we've got extensive IP and capabilities to help customers drive their own growth through innovation. So we're adding capacity in our North American network, which is underpinned by customer contracts. The second box there just talks to the organic growth that comes from our emerging market portfolio, $3 billion worth of sales, a long history of profitable growth in those markets. And again, we're investing behind that opportunity, including a greenfield plant in China to support our expansion in the region. And then the third box there is innovation and new product development, and that's increasingly contributing to our organic growth. We're investing in this area. We're expanding our global innovation network in Europe and China, and we've recently announced a partnership with Michigan State University School of Packaging. And we've announced this year our kind of entry into corporate venturing space as well. Finally, the number one organic growth driver for Amcor, which cuts across all of these, is the increasing need for more sustainable packaging. And we know there'll always be a role for packaging for essential food, healthcare products, and the ability to provide that packaging so that it meets the need of our consumers and is more sustainable creates a real opportunity for growth. So slide 11 just gives a snapshot of that. So the fundamentals of the business continued to strengthen through the year, and we delivered a really strong year. EBIT growth was 8%, margins expanded 60 points, as I've mentioned, and that's a new high for Amcor. EPS increased 16% for the year and was ahead of guidance, and we were able to continuously increase that through the year. Free cash flow of 1.1 billion was at the top of our expected range, and return on capital finished well above 15%. Through the year, we returned 1.1 billion of cash to shareholders through share repurchases and higher dividends. And looking forward to FY22, we expect another strong year. So we expect comparable constant currency EPS growth of 7 to 11%. Free cash flow could be 10% higher than this year, at the top end of the range of 1.1 to 1.2. And then we're, that growing cash flow as well, it supports the growing dividend. It's allowing us to allocate cash to share repurchases, which we've announced will be 400 million this year, and allow us to fund acquisitive growth when opportunities arrive. Slide 12, nearly done now, just summarises where we're at with the transformational Bemis acquisition. We're 2 years into this now. Integration efforts are basically complete, and the outcomes are exceeding our original expectations. So based on our FY22 expectations, so for the coming year, at the end of that 3-year period from closing the acquisition, we expect will outperform the cost synergy target by at least 10%. Margins in the flexible segment will be 200 basis points higher than they were in fiscal 2019. EPS will be at least 35% higher for the group. And we will have actually repurchased around 25% of the shares that we used to issue to fund the acquisition in the first place. And our cash flow will be close to double what our cash flow was in the year prior to the Bemis acquisition of FY18. So on top of all those financial benefits, strategically Bemis has been a perfect fit. And today, as a result of the acquisition, we're better positioned than ever with a strong foundation for growth looking forward. And I think just to summarise everything on slide 13, the final slide, right now the business is demonstrating the benefits of industry-leading position and our scale, continuing to build on our track record. The resilience and consistency from our consumer markets is clear. All of that is supporting the attractive and growing dividend, and that's all underpinned by the growing cash flow, the strong balance sheet, the investment-grade credit rating, which gives us plenty of capacity to grow organically and via M&A. And right now we've got momentum building. We've got good organic growth, further synergies in the year to come. We've got the buyback program, and we're investing right now for further organic growth. So all in all, we think the investment case has never been stronger.